Hello guys, welcome back to video number 4, I think, from the series. Today we're gonna be going into pips, lot sizes, and leverage, because in the next video we're gonna be placing some trades so we can start getting used to and understanding the mechanics of actually placing trades. Okay, so let's jump right in. Let's not lose too much time. So what is a pip? Forex currency pairs are quoted in terms of pip, short for percentage in point. In practical terms, a pip is 1/100 of 1%, or the fourth decimal place in the price. So what do we mean by that? Let's go here to paint. Okay, I have paint ready here. Okay, for example, let's say right now on the Euro USD. And the Euro USD right now, let's say, is trading. Let's say it's trading a 1 point. I think right now it's 1.05 something. So let's say 1.05 Okay. What a pip is, I mean, if we go back to our notes here, right? It's saying it's, in practical term, a pip is it's 1/100 of 1%, or the fourth decimal place. So basically from here, right, this will be the 1, and then the fourth decimal place. So 1, 2, 3, 4. This is the 1 pip unit. So in our, if we go back to paint here, okay, that will mean that in this example, let's say we will have to move 1, 2, 3, 4, and now this will be our single unit of pip. Okay, so that means that if this number goes up in value in 1, it'll be 1 pip, right? If this number goes in value, by 2, that's an ugly 2. That will be an increment of 2. So if that's the case, I mean, for now, so to calculate the pips, let's place another example here. So let's say price goes up, in the Euro USD. The Euro USD goes up in value, and now it's trading 1 point. Let's see, 0.5 550. Let's do that. So what does this mean? Okay, how many pips did it go up in value? Well, to calculate the pips, really is, we'll do the same thing. We'll come here, we have to move this decimal point 1, 2, 3, 4. Now, how many units? It changed from 0 to 5. So it went up in value 5 pips. Okay, now let's say instead of going up in value, it went down in value to, let's say, 1.05 450. Okay, if it went down in value, right, we'll do the same thing. 1, 2, 3, 4. Okay, and now this is our single units. How many pips did it go down in value? Okay, well, it says 5, and you're not sure. Well, the other number also changed, right? Over here it was 55, so now here is 0.545, right? So this means that it went down also 5 pips. Okay, so to make it easier to understand, okay, we're just gonna delete this real quick. So basically what we're saying with this is 1.05 500, the same. So it's easier for you to understand. I think about it like this. So if we go, let's just mark it again so it's easier to see. 1, 2, 3, 4. Now this is our single digit. This is a double digit, triple digits, and our 4 digits, right? So that will mean these are basically single digits. These are tens, right? These are 100ths, and these numbers are the 1000s. What I mean by that is that if I take these 4 numbers, how do I read them? I read them 550. So there is 550 pips right here in this number, right? So if price goes down, for example, let's say price goes down to I don't know, let's see, 1.05350. Let's make it easier like that, right? And let's make this red. Okay, so now if price went down and price will do the same, 1, 2, 3, 4, right? And now to easily calculate this, we just take these numbers, and now how do we read this? Okay, we know we had 550 over here, and now it's 535. So how many pips? 15 pips. That's how much it went down in price. Now let's say it goes even more. It goes down in price even more, and now it's at 1.04 like that. Okay, so how many pips? Well, we have to do the same, right? We will have to go decimal point 1, 2, 3, 4, and now these are the numbers that I care. So if these are the numbers that I care, it went down from 535 to 435. So from this number to this number, how many pips did it go lower? Well, a total of 100 pips. Okay, so that's how we calculate pips. Okay, so I hope now you understand pips. So that's the movement in price. Now let's try to go to the charts and try to understand maybe a little bit over here. Let's zoom in to the 4-hour chart over here a lot. So for example here, let's say price right now at this point, it's let's say, to make it easy, let's say price was over here, 105,400 even. Okay, 105,400. So in this case, we have to move 1, 2, 3, 4. So it's the second number from the right that counts the pips, right? It's the second number from the right. So if we go here, if price was right now, let's say 400 even, and it goes to, you know, which is reading at the last 3 numbers over here, right? If it was a 400 even and now goes to 450, it went an increment, the second number from right to left, right? It went up 5 units, basically what we were doing. So that means 5 pips. Now, if it was, 400 and then goes down to 500, that means the second unit went up 10 units. So that will be 10 pips. Now, to make it easier in the charts to calculate pips, you use this tool right here. This is your measuring tool, the ruler, and that we can actually, if we put it exactly at 1.05400, right, and then we click, and then we drag it, we just click and then go up to 450. It's telling me right here that that's 5 pips. Okay, this is really easy to calculate once you place in trades, because, like, for example, let's say you wanted to sell this market because we're in the bearish market, and you're thinking that, you already, you saw this trend line over here, whatever, and now you wanted to sell this market as it is right now, but you don't know how many pips this is, right, to define your stop loss. So what you do is you take the rule, and let's say you wanted to trade right there. You wanted to go in right now, the price what it is, but you want your stop loss above the previous high, which is this one, and you will just drag this over, and you know that is your stop loss will be right there. So now you know your risk is 58, like almost 59 pips, right? So you can count 59 with the spread. So now you will take this trade and you will enter right there, and you will put it, right here, right? And now you can take this trade to whatever, structural points you have to the downside or whatever you think is going. But now you have your risk defined. You know how many pips you want to lose, and we're gonna go deeper into risk and position sizing on the next video. Today, I just want you to understand the concepts. So, if you just want to read pips, remember you just gotta move the decimal point 4 times, and that last number, that's your single unit. And then you go, the number to the left is your, let's go back, to here. So to paint, so we know 4 units, that's your single unit, right? The 5 will be your tens. The other 5, 3 numbers now, that's your 100ths, and that will be your thousands. Okay. So now that we have that down, let's go back to our notes. We have up here. Gotta zoom in. Zoom out a lot. Okay, hopefully everything is still in. Let's just fit that into the screen. Okay, now now we know what pips are. Now let's go into the second part of this video, which is what is a lot and or a contract. Now, Forex is commonly traded in a specific amount called lots, or basically the number of currency units you will buy or sell. A lot is a unit of measuring a transaction amount. When you place orders on your trading platforms, orders are placed in sizes quoted in lots. Now, the standard size for a lot is 100,000 units of currency. Now, what do we mean by that? For example, in the Euro USD, okay, it's seen as, we're trading 2 currencies at the same time, but it's seen as one asset. So everything we do when we buy or sell, everything we're doing it to the first unit. In this case, it's Euro USD. So we're buying euros or we're selling euros, but the currency we're using to pay for them are dollars, right? So if we want to buy one lot size, right, we're thinking the price of the euro is going to go up. We're saying we're buying 100,000 euros. If we want to sell one lot, that means we want to sell 100,000 euros. Okay. Now, most brokers in the Forex market, they're going to let you place orders smaller than that, but that's the standard. Okay, 100,000. Now, some brokers are going to let you place orders in mini lots. Okay, what is called a mini lot. A mini lot is 10,000 units. So basically 1/10 of, of the standard side. And then you have micro lots, which is 1,000 units, which basically is 1% of the standard lot. Now, some rare brokers will even give you nano lots, which are basically just 100 units. But really, at that point, you're not really making any money. Okay, now the standard units, what they're saying, it's so you're getting 100,000 units. Okay, so now to calculate the amount of money that you're gonna get per pip, it's actually pretty easy at first. Like, this is the way I do it. I know there are some other ways out there to do it, but a standard lot is gonna give you basically 10 units of whatever the set, because we are actually trading these 2 units. Now, if you live in the US, this will be really simple, right? Or whatever you use American dollars, this pair will be really simple because you will get 10 units of whatever per pip. Okay, you get 10 units of the second unit that you're using in the pair. Like in this case, like I'm saying, for people that use dollars, it's pretty easy because you just know that if you have, for every pip that you're getting $10. Okay, for every pip that goes up in value, you're getting $10 if you buy 100,000. Okay, but let's say you don't have, like, you live in Mexico, okay, and you don't have dollars, and then you just want to know how many pesos you're getting, per pip. Well, now you have to do a double conversion, right? Like, you have to see what's the exchange rate. You're gonna get $10, and now you just gotta see how many pesos you're getting per dollar. So let's say the peso, you're getting 20 pesos per dollar, right? If it goes up $10, that'll be 200 pesos. You're getting 200 pesos per pip. And this gets really confusing sometimes because people think, oh, a lot of people use the EURUSD to gives examples just because it's the easier to understand. But I just want you to know that this standard lot, you get $10 here. But if you trade let's say the Aus, let's say the USD CAD, for example, right? USD CAD right now is I believe, I don't even know, I haven't even seen it. Let's say let's go here and USD CAD. Let's get that over here. Okay, USD CAD right now is trading a 130. Okay, $1, just listen to this. $1 will cost you $1 and 130 Canadian dollars. Okay, $1.30 of Canadian currency. Okay, to buy $1. So now for this pair, if I buy one standard lot in the Canadian dollar, of this currency of USD CAD, what I'm saying is I'm buying $100,000. Every standard lot, like, we're trading these two currencies. It doesn't matter that I have dollars in my broker account. We're trading these two currency. So for every pip in value, I'm getting 10 Canadian dollars. I'm not getting 10 US dollars for every pip. I'm getting 10 Canadian dollars. Now, the Canadian dollar, I know that it's at 130. So if I get 10 Canadian dollars, I'm gonna get, in dollars, are gonna be like $8, right? Or $7, right? Yeah. It's gonna be like $7, 7 something. It's not gonna be $10. So now that's how I know that I have to. So whatever currency you're trading, you also have to know the exchange rate of the currency, your base currency that you have in your trading account. So if you live in Mexico, like I'm saying, it's gonna be pesos. And if you live in another country, whatever currency, you have to learn also the exchange rate from that currency, to yours. Okay, what is the exchange rate? So that way you know. And that's why you shouldn't be trading a bunch of pairs. Honestly, I only trade 2 pairs. I only trade Euro USD and USD JPY. Those are the two pairs I trade. I don't trade nothing else. Once in a while, I'll look at other currencies, but I'll trade the Aussie dollar once in a while, but and GBP USD, but that's it. Like I only have my two main pairs are Euro USD and USD JPY. I just know the exchange rate. That way, I understand completely the currencies and everything. Okay, Euro USD is really easy. I know if I place one lot, I'm getting $10 per pip. I mean, if I want to trade, I mean, if I want to risk $100 in that trade, I know my stop loss doesn't have to be more than 10 pips. Okay, and that's basically how the lot size work. So let's go back to where were we? Euro USD. Let's go back up here. Right. For example, on the Aussie dollar, it's like 70. Let's say it's trading at 70 cents. So for $10 for every pip, if you buy a standard lot, every pip is not gonna be $10 anymore, because you're getting 10 Australian dollars. But then the exchange rate of the Australian dollars to the US dollar is 70 cents. So now you're getting, so you know that the price is $7, the standard lot size. So that's why I recommend not trading a lot of pairs. You should only be trading like, the most you should be trading is 3 pairs. Never trade more than 3 pairs, because that way you can get everything down, and it's really easy to calculate the risk for your positions later on, because you automatically know that if you're trading Aussie USD, oh, like every lot size is $7. So now it's easier for you to calculate, okay, because you're not thinking of, oh, you're getting 10 Australian dollars and then you have to, calculate. No, you just know, okay, Australian dollars is going to give me $7. Okay. And for example, on USD CAD, oh, 1 Australian dollar is going to give me, I mean, one lot size is going to give me like $8, right? And then it's really easy for you to, let's say now if you want to risk the same $100, now you're gonna have to buy like 1.30 lots, right? So basically you have to buy one standard lot and then 3 mini lots, right? 1.3. So that way you're risking the same $100. You're getting a lot more units of the pair, of the second pair, but in dollars you're risking the same amount. I hope that makes sense. If you guys don't understand it completely, and you want me to make another separate videos on just that, then just leave a comment on the on the comment section, and I'll try to make another video trying to explain that even deeper. Now, the other thing that goes hand in hand with leverage, I mean with pips and lot sizes, is leverage. Now, what is leverage? Leverage is the use of borrow funds to increase one's trading position beyond what could be available from their cash balance alone. Okay. Then so it's borrow money. Leverage is just borrowing money. So where are we borrowing money from? Where? Well, brokerage accounts allow the use of leverage through margin trading, where the broker provides the borrow funds. So you're borrowing funds from your broker, whoever you make a account with. For example, I have Forex.com. I'm not being sponsored by them or anything. That's the broker I use since I started trading. They provided 1 to 50 leverage. So for every dollar that I put in my account, they allow me to trade $50. So that means I only need to have 1/50th of the money, which is $2,000. So to place an order for 100,000 units, I only need to have 2% in my account. Now, different pairs, they have, they're saying they're giving you up to 1 to 50, but different pairs have different margin. So basically my margin in that transaction that I just explained was 2%. I only need to have 2% of the whole amount that I wish to be trading to place that order. Now, some others, different pairs have different margins. Some are 3%, some up to 5%, but usually it ranges between 2% and 5%. Okay, so let's say for another pair, the margin is 4%. So you will need $4,000, right, to buy the same 100,000 units. Now, remember that everything we do, we're doing it to the first unit. Like, we're always dealing with the first unit. So in USD CAD, the margin is 3%, right? The margin is 2%. Let's say the margin is 2%. So I'm getting the full leverage of 1-to-50, right? So I only need $2,000. That's what I will need in my account to place that trade, right? But if I'm trading the Euro USD, remember, we're buying the first unit. So the margin is going to be the same thing, 1-to-50, right? So if I want to buy that amount, I would need 2% of that amount. So I will need 2,000 euros. Now we know that the euro is trading at $105 right now. So if I need 2,000 euros in my account, that means that I will need $2,050. Okay, so I hope that makes sense. Just like with the profits, everything we're doing it to the first unit. Okay, the first unit in the pair. If it's USD CAD, we're doing it to the USD dollar. If it's a Euro USD, we're doing it to the euro. Okay, so leverage is basically just that, the borrowing money to place trades. Now, borrowing money, it's, you might say, oh well, that's fucking amazing, right? Because now you can only, let's say you have $3,000 in your account, you can actually place a trade for, you can buy 100,000 units. You can control 100,000 units while having only 3% of the money. So what that means is, let's say I have a small account with $3,000, right? Let's say I have $3,000. So, and I buy 100, I bought one standard lot size. Now, if I buy one standard lot size, that means for every pip that goes up in value, I'm gonna gain $10. Okay, so if it goes up in value 10 pips, I get $100. If it goes up in value 100 pips, I get $1,000. $1,000, right? So nice, right? Yeah, that's amazing, because if I only had the $2,000 on my account, that means I would only be able to, the $3,000, that means I will only be able to place 3 micro lots. But remember, leverage is a double-edged sword. Over here, Forex, let's go to the last point. Let's read that. Forex traders often use leverage to profit from relative small price changes in currency pairs. Leverage, however, can amplify both profits as well as losses, okay? Because now that you're trading a bigger size, right? Those same, let's say it goes up 100 pips, yes, you're making $100,000. But now, if it goes, but let's say if it goes down 100 pips, you just lost $1,000. That's 1/3 of your account. That's 33% of your account. Now, to gain that back is going to be pretty hard. And then on the next video, we're going to go deeper into actually placing trades. We're going to go into orders. What are, the technicality of placing orders. Basically, what are market orders, stop orders, and limit orders. And then we're going to start making a few examples. We're going to place a couple of trades so we can understand visually what we're doing. Okay, so just a quick recap, right? Pips. What are pips? So pips are basically, it's just the unit of measurement that we use to calculate how much money you're making or losing, right? In practical terms, a pip is 1/100 of 1% of, or the 4 decimal place. Remember what we did over here. We move it 4 times. I mean, four. Yeah, we move the decimal point 4 times. 1, 2, 3, 4. And from there, we start reading to the left, right? So if that number goes up 5, that means it's 5 pips. If it goes up, now this number goes up 1 value, that's tens. So if it goes to 60, that's 10 pips. If this goes up in value, this number goes to 6, that is 100 pips. And if this number goes up in value, that's 1,000 pips. Okay, so I hope that made sense. And now, what are lot sizes? What you need to know is lot sizes are basically the contracts. Just look at it this way. Like it's kind of like when you go to the supermarket and you buy eggs, right? You can't buy just one egg from the supermarket. Usually you have to buy the dozen, right? So look at a standard lots, like basically that's what it is. They sell you the package. Now, some stores are gonna allow you to buy, single, just 1 or 2 eggs, right? So same thing, some brokers are gonna allow you to buy, meaning maybe like half a dozen of eggs, right? So in this case, a mini lot, which is 10,000 units. And some, other mini supermarkets probably are gonna even sell you eggs by, single units, right? Kind of like over here, some brokers are gonna even allow you to trade into 1,000 units and 100 units. Okay, so those are the standard lot sizes, but most of the time you're just gonna see the standard lot, mini lot, and micro lot. This almost you're never gonna see it. And then we learn a little bit about leverage. What is leverage? I mean, brokers, like we said, they're gonna offer you leverage. And in the U.S., if you live in the U.S., regular brokers that that are doing everything legally, the max leverage that they can offer you is 1 to 50. Now that's the max. That means that there is some, depending on the broker, they might only offer you 1 to 10 or 1 to 25 or 1 to 50, which is the max, right? I personally, like I said, I use Forex.com, and they offer 1 to 50 leverage. So I know there's other ones like Wanda. I heard that it's pretty good. I never use it. Honestly, I have only been trading on Forex.com since I started. Never had any issue with them. So they offer 1 to 50, which means that if I'm buying 100,000 units, I will only need basically 2,000 units to buy one standard lot size.